Okay, welcome back to Block 101, home of value investing in disruptive innovation and tech. And I'm just going to go over my top 7 stories for the week ending 27th of the 8th, 23. Okay. Yeah. So first story, crypto has amplified financial risks in emerging markets, central banks warn. Cryptocurrency assets have amplified rather than reduced financial risks in less developed economies, and regulators will need to treat them in the same way they oversee other assets, some of the world's most powerful central banks have warned. Novel solutions to payment challenges should not be classified as dangerous simply because they are different. However, the global central banking body added that the appeal of crypto was illusory in a paper published on approaches to regulation. Basically, it's not real. Crypto has been promoted as a low-cost payment solution and substitute for national currencies in countries with high inflation or high exchange rate volatility. However, crypto assets have so far not reduced but rather amplified the financial risks in less developed economies. Therefore, they should be assessed from a risk and regulatory perspective like all other assets. Some were comforted by the limited blowback for the wider financial system as crypto's value plummeted by 70% within just over a year of its all-time high, but regulators, including the European Central Bank, have continued to warn of future risks. Our global securities watchdog, IOSCO, is pushing national authorities to be faster and bolder in their approach. All but 2 of the top 20 countries for crypto adoption are emerging markets, with countries like Venezuela, El Salvador, and Nigeria becoming testbeds for whether cryptocurrencies could offer a balm to countries ravaged by inflation and depreciating official currencies. The committee also cited a combination of the lack of financial literacy and technological knowledge in emerging markets as creating a potent catalyst for risks to financial stability, especially concerning crypto assets. In terms of regulation, I still believe there's going to be regulatory uncertainty for crypto for a while. Like, these banks and these governments don't really need to do anything much. Like, from what they're saying, it seems like they're suggesting crypto will just eventually die off. And the longer that it goes on, where there's no regulatory clarity, it's gonna be a slow death for crypto. Because these institutional investors, they don't like regulatory uncertainty. Do you understand? They don't like uncertainty at all. Yeah. They want regulatory clarity in these areas before they put money in. You know, the big money that crypto heads and crypto advocates are looking for. Let's look at this index though, because I've actually never seen it. So you got Vietnam, Philippines, Ukraine, India, US, Pakistan, Brazil, Thailand, Russia, China, Nigeria, Turkey, Argentina, Morocco, Colombia, Nepal, United Kingdom, Ecuador, Kenya, and Indonesia. I'll probably explore this on Patreon and look into it to provide you with greater insight. That's interesting because El Salvador is not even on there. It's not even on this list. And they've adopted crypto Bitcoin as legal tender. So emerging markets will always be a testbed before they come over to developed markets. If they're saying that they haven't seen any benefits and they've just seen amplified risks, financial risks, there's no way in hell that they're going to allow that to happen in developed markets such as the US or America. Yeah, it's not gonna happen. But anyway, next story. Pension funds shake off crypto worries with backing for broker Hidden Road. Traditional investors such as pension funds are providing the finance into a broker that is helping hedge funds take bigger bets on volatile cryptocurrency assets. London-based Hidden Road, which last year raised a 50 million equity investment from Citadel Securities and exchange Coinbase, among others, has emerged as a crucial player in bridging the gap between traditional investors and digital assets. The group also serves as a potential lifeline for the crypto market, which is facing a deep squeeze on leverage and dwindling trading activity after a series of scandals, including the collapse of exchange FTX. Prime brokerage is a common way for traders in mature markets such as stocks to get leverage as a way of juicing their bets. If a hedge fund borrowing money from the prime broker suffers large losses on its investments, then the prime broker or its investors can be left footing the bill. You're playing with taxpayers' money, man. These pension funds, bro, especially this one, it's a very risky investment to make. If my pension fund said they were going to get into crypto, I'd be very worried about that. I would be too. I would be too. Like, investing into crypto is a personal choice. I wouldn't want my pension fund to be investing into crypto at all, blood. I would be worried. Yeah, I would be worried. Yeah. Now, some people may believe that this is positive. I know a lot of crypto advocates will believe that it's positive and shows a demand from institutional investors and pension funds to put money into crypto, but the move by Lockheed Martin's plan and others mark the latest venture into crypto by pension funds, many of which are seeking ways to improve their own returns. However, a number have been burnt, highlighting the risks of digital asset markets. Canada's 190 billion Ontario Teachers Pension Plan and 300 billion CDBQ lost their investments in crypto exchange FTX and lender Celsius, respectively. That's crazy. If I put my pension into that fund, I would be absolutely fuming. I'll be absolutely fuming if I put money into a pension fund and they chose to invest it in crypto. Nah. Prime brokerage is an inherently risky business, even for the biggest banks. One investor who met Hidden Road described it as prime broking on steroids and said they were risks of relying on someone else's capital. There's always risks on relying on someone else's capital. Some executives also worry about Hidden Road's size. Its balance sheet is in the hundreds of millions rather than billions of dollars that banks typically have. While Hidden Road would be on the hook for any losses, some fear its balance sheet will not withstand a large market event, and the investors providing capital may need to stump up more at short notice. Yeah, which is a concern because the more money that you have, the greater capacity you have to take on risk. Next story. Friend.tech is crypto's latest obsession, but critics say it won't end well. Decentralized social media app Friend.tech has exploded in popularity. The Twitter-linked crypto app, which lets users buy and sell shares of their friends' social media profiles, has racked up 1.4 million in fees in just 24 hours, according to DeFi Llama. Friend.tech has attracted so many users, it is struggling under excessive traffic. Users who buy keys to another account gain exclusive access to that user's private chat room. The speed which people have signed up for the app shows that there is a demand for a social token platform. Some are publicly skeptical, claiming that the protocol functions like a Ponzi scheme and will eventually come crashing down. Mate, how is FriendTech not a clear as day Ponzi? You banned if more people buy that group. It goes up. The only way to appreciate is more people coming in with the inevitability of a load of back orders. What am I missing? NFT personality Beanie said on Twitter that he's seen it before and it ends in mass carnage. Every couple of years in crypto, somebody reintroduces an elaborate Ponzi with a bonding curve, he said, and there's always some group of influencers that rave about it being the new paradigm. I'm not on friend.tech. I haven't tried it out. Maybe I will, just to, have a poke around and look at it. But it does seem like a Ponzi scheme to me. I'm not gonna lie. I do agree with those sentiments in there. Them changing it from shares to keys just highlights the problem, innit? Like, obviously this is leading on to it's basically the same story. We're still talking about friend.tech, them renaming their token. When you declare something to be a share, people automatically, most people will assume that you're going to get a share of the profits from that company's activity, or, these individuals who are developing the protocol or the system or the venture efforts, okay, which meets the Howey test. We've renamed shares to keys, friend.tech posted on Twitter. The original name was a placeholder during development, and we think keys better illustrates their purpose as in-app items used to unlock your friends' chat rooms. Gary Gensler has labeled many digital assets as securities, and by calling their assets shares, FriendTech could have found itself in his crosshairs. It's just true. Like, I don't even think changing the name from friends to keys, from shares to keys, stops it from being classed as a security. Do you understand? Like, most people would have purchased these keys under the guise that, they will eventually appreciate in value based on the efforts of other individuals, or, based on the efforts of whichever social media star or, Twitter account they have, their efforts. Do you understand? Efforts of somebody else, okay, which meets the criteria of the Howey test. My legal alarm bells went off when I saw that the tokens were called shares. Yeah, by calling it shares, a purchaser may reasonably believe that they are buying something similar to stock. But as I said, even if you're changing it from shares to keys, like, people aren't stupid. Regardless of the name change, he doesn't believe the tokens on friends.tech could be considered securities, but he said how users pitch their tokens matters. What's the difference between this and having an OnlyFans account? And it's even been reported that OnlyFans account holders are moving over to friend.tech and have open accounts. So, yeah. Next, we have Ferrari CEO says nearly a third of new buyers are under 40, even as waitlist grows. We are a brand that is looking for value and respecting the client. For us, the client is very, very important. The client is giving a value to our cars because they are unique, because they are limited, because they are exclusive. We could make more, but that doesn't make sense. We will offend our clients. The company's share price is up 44% over the past year, at a valuation higher than Ford or General Motors, creating pressure from shareholders to continue its strong sales and volumes growth. If you look at Porter's generic strategies, you've got the differentiation strategy, and you've got the cost leadership strategy as well. Okay, and then you got niche. Ferrari is definitely employing the differentiation strategy and employing it very well. Yeah. Let's just look at the share price actually. So we go to Ferrari. We got what? More than that, to be fair. Well, that's from October. But in general, you can see it, innit? Like, it's just been moving mad. Last year, Ferrari produced roughly 13,000 vehicles, up 18.5% over 2021. Demand still far exceeds supply. Many buyers say they can't even get on the waiting list for a car since there's simply not enough production. Wigner said that despite limited supply, the company continues to expand its reach among younger new clients. So the thing about this story which grabbed me wasn't so much that a third of new buyers are under 40, but their performance and their business model. They're clearly employing a differentiation strategy, which is also based off scarcity as well and exclusivity. And it's working for them. Yeah. The pressure that they're receiving from shareholders to produce more, they shouldn't succumb to, they shouldn't bend to. Like, sometimes shareholders, they don't understand business like that well. They don't understand the value proposition. Even though they're shareholders, they just see the numbers go up and just expect it to go up with volume. I haven't analysed the profit margin on a Ferrari on their cars, but I can imagine it being crazy. Because again, like when you have products which are based on differentiation and scarcity and exclusivity, your profit margins can be very high. They're above normal. So they wouldn't want to disrupt that. The management team, at least. Like shareholders, half the time, they don't really know what they're talking about. Pressure from shareholders to continue its stronger sales and volume growth. Like, no, you're gonna collapse the business model like that. Like, just be content. Be happy with what you have. Like, they're growing. Shit, man. They just see dollar signs, honestly. Greedy ass bastards, man. Like, they can be so greedy at times. If it's not broke, do not fix it. The model works. Anyway, next one. Central African Republic eyes tokenizing its natural resources. Even though Bitcoin is no longer legal tender, the country remains committed to crypto. Despite the lukewarm response to Sango coin, the nation's indigenous digital currency, the Central African Republic has laid the groundwork for tokenizing its natural resources. The CAR's legislative body has granted approval for the tokenization of land and natural resources, hoping to position the nation as a preferred business destination in Africa. Sango project launched last year with resource tokenization in mind is meant to enable investment in the country through Sango coin, a state-issued token backed by Bitcoin on a separate sidechain network that is not a central bank digital currency. Yeah, fail. A state-issued token backed by Bitcoin. Why are you backing things by Bitcoin in the first place as a state? Like, no. I can see why that had a lukewarm reception. No. However, CAR's constitutional court ruled that purchasing land and citizenship using a token was unconstitutional 2 months after the token's ICO began. So its native reception wasn't very impressive either. Despite offering 200 million Sango coins for sale at a price of 10 cents during its genesis cycle, the government managed to sell less than 8 million coins to citizens at the same time. And this kind of touches back on the earlier point where, these emerging markets or countries in emerging markets, they're not really financially literate like that or understand technology all that well. In April 22, the nation made headlines for becoming the second country after El Salvador to accept Bitcoin as legal tender. But the law was reversed roughly a year later. Yeah. I believe it's only a matter of time before El Salvador reverse their decision to make Bitcoin legal tender as well. But Nayib Bukele is a stubborn guy, it seems. So he's going to ride this till the wheels fall off. Do you understand? So I think if they get a new president in, yeah, they're going to scrap that, man. It's not working. It's not working. US stocks drop after Federal Reserve official warned more rates rises may be needed. US stocks fell after a Federal Reserve official warned that the central bank could raise interest rates again and remain higher for longer, offsetting enthusiasm about blockbuster earnings from chipmaker Nvidia. Okay. So S&P 500 and the Nasdaq, the two large indexes which are dominated by tech stocks. The Magnificent Seven, which includes Nvidia, your Apple, your Google, your Microsoft, Tesla, which has really been pushing stocks higher this year based on AI. And you've had Nvidia second quarter results come in. They had magnificent performance despite the chip shortage. Okay, the demand is still there. It's outstripping supply at the moment, which again references back to, Ferrari's case. Yeah, if people want it bad enough, they'll be willing to wait in it and put it on order for a year, let's say. So Nvidia are really the dominant force in GPUs and semiconductors. Okay, so their business is pretty much secure. Although you do have companies such as your Apple trying to make their own chips or are in the process of making their own chips. Along with Amazon as well. They're making their own chips too, to be fair. US stock market staged a broad sell-off, but the main indices were initially boosted by gains for Nvidia. Yeah. Chipmaker reported on Wednesday that its revenues had more than doubled in the last quarter, outstripping already high analyst estimates. Nvidia shares shed early gains to finish 0.1% higher, but it was the only member of the Magnificent Seven group of tech stocks to close up. The rest fell, with all but Alphabet down by at least 2%. Demand for AI and chip-related stocks have tripled Nvidia's market capitalization since the start of the year, making it the first chip maker to be valued at more than $1 trillion. And the thing about Nvidia and these other chip makers is you gotta understand where they sit in the supply chain. So literally, they're right at the beginning, more or less. And even in the value chain too. So when you're looking at the value chain and you're also looking at the supply chain, the products that Nvidia produces are critical. Okay, they're necessary components. Okay, some might even say that Nvidia and chips are the new oil. Okay, they're needed. Do you understand? Nvidia, chips could soon be a commodity. Do you know what I mean? If we look at Nvidia, you can just see this run that they've gone on since the start of last year. Yeah, not the start of last year, but since October 22. Absolutely ridiculous. And this is on the weekly chart. Bear in mind, what's that? 323%. It's crazy. That's a weekly chart. If you look on the daily, and this is called 3D charting, by the way. Look at the daily chart. It's just up, just green candles, man. Just green candles, bro. And we're so far removed from the volume weighted moving average. Yeah. We should really be around. I wouldn't touch this stock until we're back here. Like, we're so far removed from the volume weighted moving average as well. Like, there's so much positive momentum and exuberance in the market regarding these AI stocks that even now I wouldn't probably get into Nvidia. I'd wait for it to correct a bit more. I do believe that a correction is still going to happen, but that's gone. Anyone that got in during October 22 is absolutely laughing. Just look at that Nasdaq composite compared to Nvidia. This eagerly anticipated report was a lot more than just about Nvidia's earnings. It is being read as an insight into the impact of generative AI, where Nvidia technology leads the way on the wider software and computing industry. Which is, yeah, I can see that being true. I agree with that, to be fair. Dogecoin Millionaire's fortune fell from 3 million to 50,000, but he hasn't lost the faith. I've been a victim of this myself, like hodling. In one situation, I sold too early. I sold too early. I sold out a Cardano before it went up to before it went up to $1 and $2. Do you understand? I bought Cardano at 2 cents. I had 500,000 ADA. Yeah. And 500,000 ADA. I ended up selling at 30 cents. I sold too early. I sold just before the Fed started printing bare money in January of 2021. Yeah, of 2021. Yeah, he killed me, crushed me. Couldn't believe it. But yeah, you have to take profits. You have to take profits and never try and time the market. I don't think he's going to see 3 million again on Dogecoin, to be fair. I don't see the market going back up like that. Obviously, he was holding out for $1, but all-time high was 73 cents. Imagine that a man took out 250,000, yeah, in savings and credit card, yeah, sharp to 3 million, and now it's down to 50,000. Obviously, he's still making money now. Do you understand? So he's probably even covered that 250. He's probably cleared that 250,000 that he invested in, to be fair, in other ventures, let's say, through other revenue income streams. But to be 3 million up, you understand? Within less than a year, this would have been as well. And now man's going to be holding out for God knows how long. I doubt he'll ever see 3 million off Dogecoin again. He believes Doge will definitely become the money of Twitter. On Twitter, firstly, Twitter's dead. Twitter's now X, so that's not gonna happen. Obviously, you can joke about it now. You have to joke about it. If you don't joke about it, you'll cry. But yeah, I found that quite interesting. Always take profits and opportunity. Don't never try and time the market, but just know when to take profits, innit? And this is greed, innit? This is greed. See, he's trying to tell himself crypto markets are cyclical. I went into it understanding this concept. I just miscalculated how low it would actually go. Doge will go to $1 on the next bull run. I'm sure of it. Bruv, hopium, wishful thinking. Next time he said he would sell, but not necessarily all of it. We were always valuing for $1. I want to introduce more healthy habits in crypto, and taking profits is one without getting shamed. Yeah, listen, once you get burned the first time of not selling and being part of this crypto group, like, of hodling, not selling, having diamond hands. Listen, I don't care if people shame me in crypto for selling or whatever, or even for selling too early. You need to take profits and know when to take profits, and don't let greed get to you. Just don't let greed get to you. But yeah, I thought that was interesting. I found that quite interesting, to be fair. Last story is Threads now being rolled out on the web. Okay, I've been waiting for this to happen, to be fair. Now, I still believe it's a problem that you have to log in with Instagram, to be fair. Like, you should not have to sign up to Threads through Instagram. It's a positive step, nonetheless, that you can access Threads through the web. Like, I know a lot of people on X and Twitter, on X, which was formerly Twitter, use desktops and laptops a lot. Like, they tweet off mobile devices, but they also like using desktops too, to be fair. In terms of Meta's Threads, I will be doing a review on the current state of Threads and their performance since they launched. I think when did they launch? They launched July. Okay, so expect one in September. I might do that on Patreon. So you'll get early access to it on Patreon, and then I'll release it on YouTube. If you just look at Meta's charts briefly to see what's happening, you see on the week, on the daily, they're on an upward trajectory. They are performing well, to be fair. So those are my top 7 stories for the week ending 27th of the 8th, 23. If you found this video valuable, please hit the like button, share it with a friend. It really does help with the algorithm. If you want to see more technical analysis, and if you want deep dives into individual companies, plus predictions of what's going to happen over the 6 months and a year, and to get involved with biannual trading competitions, then please sign up to the Patreon. Link will be in the description below. I will see you next time. See you next week. Block 101, home of value investing in disruptive innovation and tech.